Growthpoint, it's the big heavyweight in the listed property space. Can you afford to not have exposure here?
Well, it's certainly there. It's in the index with that scale. It's in the ALSI 40. It's the sort of preeminent entry point. It's got high quality assets across the country. The one that you mentioned there is a case in point, but they also own, many industrial, commercial A-grade type properties. Very solid and talented management team. The relationship with Investec has been severed in the sense that they acquired the internalized, is the term, management team. They operate out of their own premises in Santon down the road here, very glossy building. So they've kind of done everything right. They've done the Australia thing recently. And obviously they would have liked to bulk up even further by taking Fountainhead, but it really does look at this point, to me anyway, as though that prize is going in the redefined direction.
Kundai, you can't fault the graph here in terms of performance, and it looks as though we're at all-time highs. Would that be a true reflection?
Yeah, I mean, Growthpoint has been, as Paul says, essentially the benchmark for the listed property sector in South Africa. At current pricing, it is close to an all-time high, and generally our view is that the property is on the pricey side of things. But speaking or touching on the Fountainhead redefine fight for
saga, turmoil.
It's gone on for maybe 6 months now. And the latest ruling or information that we received is that Growthpoint, from what we heard, was looking to preclude Redefine from voting on their bid to acquire the assets. That has since been turned down by the JSC. So Paul's assessment of the situation could be correct, but I think it really depends who you speak to. If you speak to the Growthpoint guys, there's still more in it. If you speak to the Redefine guys, they're keeping their cards very close.
Kundai, if it firmly swings into Redefine's corner, will the stock react to it at all, or is that already in the price?
We don't think so. A lot of the Redefine, the pricing in Growthpoint is really an issue of generalist investors going into the property sector. I don't think people have ever really priced in the impact of them buying out Fountainhead. So we see little downside as a result of that.
Well, that's important.
Yes, because I think it could be a net negative, I suppose, if they were to overpay. But I think the overall comments are important to note here. So what Kundai is saying is that globally there's a big desire out of the institutional money and the pension money for higher yield, low risk opportunities. We know how well the sovereign bonds have done. All those yields have been compressed. Now the Japanese are in there with their own wall of money. The net result is, if you're sitting in one of these big money management capitals around the world, it looks very attractive to get that 5% yield on a low risk, well managed, good corporate governance asset in an environment like Africa, because you know that there's a shortage of quality properties, and you know that it's an economy that's booming, and you know that it's all good, it checks all the boxes. So that's why people come looking for this. And in addition, we know that the big local institutions are also quite keen to push their property investments into these professionally run units, because that means they don't have to worry about misbehavior in their own property department. It's all good.
So let's go to the crux of the matter. Kundai, hot or not on Growthpoint?
I think Growthpoint at current pricing, not hot. I think it's run ahead of the other listed property players. Not hot at current pricing. Good story, stable stock, a bit too expensive at this point.
Paul, hot or not on Growthpoint?
Well, look, I've just given the whole sector a big stamp of approval, so I'm going to go with hot on this one too.